Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. It's one of our most popular episodes every single year. It's our predictions episodes. We predict what house prices will do this year, what rents will do this year, what interest rates will do this year, and we pick out the areas that we believe will perform best for capital growth this year, and loads more. You're going to love it.
Welcome to the Property Podcast. In case you don't know, we run a business that buys more than £100 million worth of property every year. You can find out about that at propertyhub.net/invest, which is why it's important that we have some kind of handle on what's happening and what is going to happen. This is the episode where we put our credibility majorly at risk. So I'm sure you'll want to stick around. And do make sure you stay to the end, because we're going to have a really interesting conversation about how we're approaching our goal setting for the year as well.
It's time for our news story of the week, Rob. And this is a prediction I hope does not come true, or at least a proposal that does not come true. The headline of this week's news story in Landlord Today reads, "Politicians propose landlords should pay compensation to tenants who are evicted." Rob, I didn't want to go beyond the headline, so I hope you have.
Well, luckily, if you do go a couple of lines beyond the headlines, you will see that this is, I was going to say only in Wales. That sounds rude. I don't mean only in Wales. I mean, this is a move that's being suggested just for landlords in Wales by a government committee. And it's basically saying that if a landlord wants to sell their property or move in themselves, they should give the tenant the last 2 months of their tenancy for free as compensation. Wales already, by the way, is the country in the UK where you need to give the most notice to sell a property that you're renting out. It's 6 months notice, but apparently that is not enough. And that is just one of 13 measures in a committee report that the government is considering, and apparently they have to react to by April. I've had a glance at the report itself, and it basically seems to open by acknowledging that most of the problems are due to a lack of supply, and then goes on to make a load of suggestions that will surely just reduce supply further by making life more difficult for landlords. So if I were the Welsh Government, I would not be accepting this proposal, but it will come as no shock to you, Rob, that I am not the Welsh Government. So who knows? It sounds crazy, but crazier things have happened.
There you go, everyone. Rob D, not the Welsh Government.
Yet.
We've all got to have a dream, Rob. We've all got to have a dream.
We're talking about goal setting later on.
Yeah, that's true. I like that. But what I like more, do I? Or am I just being positive for the podcast? Is when we get to do our predictions. And that is this week's episode. It is normally one of our most popular episodes of the year because people want to listen or perhaps laugh at what we have to say. Last year was an interesting mixed bag in terms of our predictions. I would go as far to say the worst we've done in recent years. It wasn't terrible. We got a fair few right, but we also got a fair few wrong. Before that, though, we were on a pretty strong run. And I feel we need to get back on track, Rob. So I hope you've got some good stuff. I have no idea what your predictions are, and you have no idea what mine are. This isn't podcast theatre. I promise you that is the truth. So it's going to be interesting. We normally are aligned, but we will see. Where do you want to start this year, Rob? What do you want to start with in terms of predictions?
I don't want to, but we've got to start with house prices because it's always the most eye-catching prediction. Every year, everyone puts out their forecasts. They all get widely reported. It's what everyone wants to know, even though I feel like we should remind at this point that what house prices do over the course of a year doesn't really matter. This is largely for entertainment purposes, but still, everyone wants to know. So in an attempt to delay having to actually make our predictions, Rob, I will run through what everyone else is saying this year. So Hamptons is saying up 3%, Savills saying up 4%, Zoopla up 2.5%, Rightmove up 4%. Nationwide up 2 to 4%, and JLL haven't specifically said about 2025, but they're predicting 20% growth, which would put you over 5 years, 4% per year compounded-ish. So Rob, that is a much more positive set of predictions than we saw last year, when the majority of those, if not all, were in the negative, I believe. So that's quite a big shift over a year. How are you feeling?
I'm worried, and I'll tell you why I'm worried, because while I said we didn't do so well on our predictions last year, this is an area we did far better than the published experts. So all those experts we've just rattled through were way, way off last year. And we were there or thereabouts in terms of house prices. The reason I'm worried is my prediction isn't that far away from what they're predicting. And so should I be worried that they all got it so wrong last year that because I'm closer to their predictions this year, is that a cause for concern? My number is the most optimistic out of all of those numbers, because my prediction is growth between 4 to 5%. And we take nationwide data at the end of the year. So we won't cherry pick. We do that every year. I think it'll be 4 to 5%, which actually does put me as the outlier in that group, because that would make me, and we'll see what you've got to say, maybe you're going to take it even further, but that would make me the most optimistic out of all the predictions. So their top range, the top prediction is 4% there. My range is 4 to 5%. And that's just where we are now, and sentiment is slowly improving. I actually think the sentiment and the market are mispriced. The market is actually doing better than sentiment, and if sentiment catches up, then that will push it on even further. Interest rates have been dropping, as we know. So those things, plus many more combined, have led me to my prediction. So Rob, what have you got?
I completely agree with your discomfort at feeling aligned with what everyone else is saying, because when we've diverged is generally when we've done best. I've really struggled with this. Last year, I seem to remember I came in with a lot of energy and a fair conviction about what was going to happen. This year, not so much. And even though I completely agree with what you've said about the disconnect between housing market sentiment and prices, and when I was trying to project forward what might happen, I had a couple of different things in my mind. One was the 18-year property cycle. So Fred Harrison, who popularized the cycle, is still saying that 2026 is going to be the peak. In order for that to be the case, there needs to be a boom, and that boom would really need to get going at some point this year in order for him to be correct. That is far from impossible. I can imagine a world where that does happen. It's not impossible to get there from where we are now, but it doesn't feel like the most likely thing. And what's weighing against that for me is general negativity about the economy. And the housing market and the economy and the stock market are not the same thing. But there seems to be so much gloom around. I can see that putting a bit of a dampener on things. So where I've ended up is actually a bit lower. I've ended up at 2 to 3% is the number that I've chosen. And even as I say it, that feels strange, given that last year it was 4% and sentiment is improving.
Do you want to change? You want to stick?
No.
Come and join me, Robert. Come and join me.
If nothing else, we need to have some difference between us just to make it interesting. So I'm going 2 to 3, but as you can hear, with a very low conviction.
So it's Rob D and the corporates versus me. All right, let's see. Now, I touched on that last year wasn't as strong for us in terms of predictions. And that was because of the next category, Rob, because this next category has been our bread and butter. This is the one where we have consistently performed over the years. And that is picking out the best cities for capital growth. Best is an interesting word, but the best cities based on capital growth this coming year. Now, last year we got 1 or 2 right, but actually we probably got more wrong than right. And I think that's the first time in all the years that we've been doing this that's happened. So I really, really want to get back on track with this. I've looked at more data than I normally would, because last year maybe I got a bit lazy. Maybe, I can't remember my predictions and how I made them last year. Maybe it was a bit more on gut. This year, it's a combination of what I'm seeing in the market, what the data's showing me, and a bit of gut. So I'm hoping if I combine those things, I'll get back to where I need to be, putting out strong predictions. I'm hoping you've put similar levels of effort in, Rob, and I'll be really, really interested to hear what you've got lined up. I'm actually hoping this time around that they are similar, because that would give me more confidence.
I'll do mine first. But again, you said that we didn't do so well last year, which is true. But if you'd invested in any of the names that came up, it would have been a good year. It's not like we said something would go up and it went down. We're talking about like mostly fractions of a percentage point in terms of growth.
Oh, I mean, Rob, I agree, but we've got high standards, buddy. Like, I don't want to just get it right. I want to get it really right. So for new people listening, I think it's worth clarifying that we weren't like disastrously wrong last year. It's just that we weren't as right as we wanted to be. They were good areas, but we wanted to pick the tippy top, and we didn't quite get there. They were close, but not quite. And this is where we've made our name. Let's get our name back in lights, Rob. What are your cities?
I was trying to take the pressure down on myself, and you just put it right back up. But okay, fine.
No, but let's go big. Let's go big.
All right. So we'll go by home track. I'm going to give 4 names and hope that 3 of them make the top 5. I would consider that a good result. So first is Manchester. It didn't have Manchester last year. Didn't think it would continue to do as strongly as it has done in terms of growth. But I'm going to learn from that mistake and back it this year. Going for Birmingham, that feels safe. That was up there. I think that's going to continue to be up there. Also going for Sheffield, because Sheffield has been creeping up. The entire time we've been doing this podcast, we've been saying Sheffield's time will come. Sheffield has been a consistent top half performer, but hasn't broken into the top 5, I don't believe. But I'm hoping this is going to be the year. And my wild card, my risky one, is Newcastle. That has definitely not made the top 5 in the time that we've been doing this podcast. It had in fact been languishing around the bottom. Tipped it last year and it managed a top half finish, possibly a top 10 finish. But because of the dynamics of the market, because prices in Newcastle are still so cheap and yet rents have been going up, I'm hoping that that growth potential is finally going to be realised this year. So Manchester, Birmingham, Sheffield, Newcastle. That's mine.
Interesting. So we didn't come to an agreement of how many places to pick before doing this. I've also picked 4, and I've approached it in a similar way. I'm possibly a bit more bold. I am going for these 4 will all appear in the top 5.
Oh, wow. Okay.
I really want that credibility back, Rob. So 4 of the top 5 I'm going for. Interestingly, and possibly encouragingly, some are the same. So I also have Manchester. I think that's nailed for the top 5 this year. It's a fundamentals powerhouse. If you've invested in Manchester, it's a great safe bet. If you are new to property investment, Manchester is a very good place to invest. We'll talk about hotspots next week, and actually more on that in a moment. Birmingham is also in my top 5. I'm surprised that we've both named my third one, which is Sheffield.
I didn't think you were going to go for that.
I've picked Sheffield because of the affordability levels. So I've looked at the major cities and looked at the affordability levels of those major cities. And Sheffield is one of the most affordable major cities in the UK. But like you'd expect with a major city, it has the fundamentals. So that's why Sheffield's made my list. I don't have Newcastle, though. So this is where we differ. My 4th pick is Liverpool. And actually, Liverpool made the list last year of the top 5. So I've not put it in for that reason. I'm actually annoyed with myself that I didn't put it in last year. And not just because I'm from Liverpool, but actually for the very similar reasons to Sheffield. Affordability is possibly the best out of what I would call major cities in the UK. And the fundamentals are very strong. Now, that's my 4. Manchester, Birmingham, Sheffield, and Liverpool. And I'm maybe worryingly feeling reasonably confident about those 4. But not all of those 4 that I've listed make our hotspots list next week. And there's reasons for that. It's not to say these are bad areas that I've just picked. Of course, I've just said they're going to be the top performers this year. Or at least that's what I believe. But there are some places that we've listed between us that do not make our hotspots list. So a hotspot is not necessarily the same as the area that will perform best this year. Remember, this is just 1 year. You don't invest for 1 year. So make sure you are on it next week and join us for our hotspots episode, because I can't wait to share those with you. But that list, Rob, I think, like I said, it's very encouraging that it's very, very close, very, very similar. That's our cities. Locked in now. Can't change it.
Oh, shame, because I'm feeling good about yours. But I think you've made a good selection there. I think your reasoning for Sheffield and Liverpool are similar to my reasoning for Newcastle, but Newcastle's got more work to do to get itself up there. So I think you could be onto a winner there. What do you have to say about London? Because we always give a prediction for London separately, purely because it's an important city and it's something that's always part of the conversation, even if we're not looking at investing there at any given time. Do you have a prediction for London for us?
So London's really interesting. Up until last year, it's been languishing down the bottom of every home track report. Month in, month out, London. If it's not bottom, it's near the bottom. And that has been consistent for a long time. Now, last year it improved a bit. We're still in the bottom half of the home track top 20 cities. But that's a slight improvement from rock bottom. But I think it's going to go further this year. And I think this prediction is quite bold. I want to really highlight that because people might not be that wowed by this prediction. But you have to remember, this is going against what's happened for multiple years now. Not just a couple of years, multiple years. And my prediction is that London, for the first time in a very long time, will finish in the top half of the home track top 20 cities.
Rob, I'm not just saying this, I'm rustling my paper at you so you know it's true. I had exactly the same thing, and I felt bold saying that as well. But London top half finish, yeah, absolutely.
I love that. I love it. I love it. I mean, we talk, right? People might be surprised to learn this, but we actually talk outside the podcast as well. So maybe it's no surprise that these places are aligned. We're not saying what do you think's going to happen with London next year. We don't have that conversation. Otherwise, it wouldn't be as big a surprise. But we do talk about London in a general sense. And we are both really interested about London. And I think we've said for probably 2 years now, we've been keeping an eye on it. So I think we need to delve deeper into the London property market in the podcast later this year, because if we are now both placing it in the top half of the charts, I think the time to talk about London in a bit more depth is here. And I think that's exciting. I think it's exciting that our capital city has gone from being a joke of an investment opportunity to a stronger watching brief, a conversation to have now. Now, it's a conversation. It's not to say don't invest in London. That's a strong recommendation. But I think it's a conversation we should have on the podcast.
Yeah, it is, and we will. But for me, it's the relative strength that London showed last year that made me feel pretty good about this. Because you had every other part of the South struggling, pretty much. You had the Southeast as a region finishing in negative territory, but London put on some growth. London rents mean that the yields look so much more attractive. So yeah, top half might not sound like an incredible result, but based on the last, 5 years or more, it really would be. So let's see. And let's move on to rents now. We've talked a lot about house prices, but rents are important too. So last year was an absolute blockbuster year for rents. If you take the ONS data, the average UK private rent increased by 9.1% last year. 9.1%, Rob. Unbelievable rental growth.
That's massive.
Unbelievable.
I actually didn't know that. That's massive. If you'd said to me, what was rental growth last year? Because I believably don't follow it day in, day out, I would not have gone that high. That's huge.
Yeah, well, you've still got seconds left to change your prediction if you want to. But while you do that, I will tell you that Hamptons reckon that rental growth will be 4.5%. Rightmove, less positive, only 3%. So go on, Rob. What do you reckon for rents?
Well, my prediction's possibly a little lazier here. And I think the fact that I didn't even know what rental growth was last year suggests that it is very lazy because I've not looked at it too hard. I've gone for a bit of a cop-out here, Rob. I've just got down that rental inflation will be higher than general inflation. So wherever general inflation is, rental inflation will be higher. I know I'm probably going to get that one right. That's a bit rubbish, but that's what I've gone with.
That is a cop-out. Thank you for flagging it as such.
Rob, I spent my time on the cities, okay? I only had so much time. I put the effort into the cities research and the rents got left. But so I'm just going for rental inflation higher than general inflation. And also I wanted the tick.
Fair enough. Okay. I also believe rents will change over the coming year in one direction or the other. Rents will not be exactly the same as my prediction. No. But I've gone for 4%, which I think is probably a little on the low side.
Yeah, that does sound low based on last year's data.
But surely it can't keep going at this kind of rate, is basically where this is coming from. I mean, if you go and look at the ONS data, there's no particular indication that it's slowing down. Actually, it did slow down for a bit and then started taking off again. But just surely. It's basically my logic there. So maybe I've got the number wrong, but at least it's a number, Rob. I've still got that.
You have got that. But based on our news story in Wales before, I can't see rent slowing down there. And we've talked about the challenges Scotland has with its rental market. Supply and demand influences the property market. But the property market's so much more complex. There's so much more to it than just supply and demand. But rent pretty much is just supply and demand. And the supply is diminishing because the governments at national and local level are making it harder to operate. And the demand, because the population increase year on year, is getting stronger. So I think 4% it will hit, Rob. It's just how much beyond. But I've made my prediction. Mine's pretty safe. Yeah. But maybe you should have gone safe as well, because 4% does sound low.
Yeah, I think you're probably right. But anyway, it's written down now. I can't change it. Let's move on to interest rates. Interest rates where I've historically been wrongest in the past, although last year got it bang on. So this year I feel like I'm playing it pretty safe by saying that there are going to be 2 base rate cuts. And I'm assuming that each of those will be 0.25%. So that would put us at 4.25, if I'm correct. That may not be bang on, but I feel relatively safe that that's going to be right-ish. Do you have anything that's going to reduce my confidence level?
No. So are you saying 4.25, or are you leaving it open that there could be an increase as well? So if there's 2 cuts that will happen, but it might not finish at 4.25, or are you, I'm making this difficult for you, but are you saying it's 4.25? So is your prediction 2 cuts or the number? What are you going for?
2 cuts because it gives me more opportunity to be wrong yet technically right. But I think the spirit of it was 4.25.
Okay, well done to you, because mine's a range. I've not gone for an exact number. You're in my range, which is it will finish between 4 to 4.5%. So it'll be lower than where we started at the beginning of the year, 4.75, but not dramatically lower. 4 to 4.5%. But you have to remember, and we will again talk about interest rates throughout the year, but where we are today with interest rates is low. In recent history, yes, you could say it's not low, but when you look at interest rates from the many, many years that interest rates have been recorded, 4.75 is on the low side, and if it gets as low as 4 or 4.25, that is historically very, very low.
Okay, so the way we like to do these predictions is to move gradually further and further from our circle of competence, which is, let's be honest, a pretty small circle to start with. But we are going to take a bold step outwards now and look at the FTSE. So going from property to the stock market. So Rob, I think you've had the better record out of the two of us on this in the past, so I will allow you to go first. At the time of recording, the FTSE 100 is standing at 8,217. Where is it by the end of 2025?
I wanted to have a bit of fun here, Rob, and go a bit bold. So I would not make any investments on this. This prediction's made by just being bold. And I'm going to say the FTSE 100 will break 9,000 for the first time.
What?
Yeah, and that's not based on a lot. I just feel that it's languished for so long while the US market's powered on for so long that the value shift will eventually happen and people will say, oh, wait a minute, there's so much value over here. My counter against it, though, and I think this is quite a strong counter, is that in the US, it's actually a handful of stocks that have driven all the craziness. And a lot of the stock market has actually done just as poorly as the FTSE 100. So because we don't have those tech giants in the FTSE 100, it's a fair argument to make that 9,000 won't happen. So I've got an argument for and an argument against, but I thought for the interest and excitement of the podcast, I'll go for the argument for, which is the undervalued argument compared to the US market. And when people go looking for value, so that lifts it up. The pound keeps getting hammered. That also helps the FTSE 100 because there's international companies in the FTSE 100. Most of them don't trade in the UK, they trade worldwide. So a weak pound actually helps the FTSE 100. I feel it's just enough there for me to go for a big eye-catching prediction of 9,000. You can probably hear in my voice, Rob, that there's not full conviction here, but I thought, let's just do it. Let's make the pod exciting towards the end.
Why not? We're firmly in guesswork territory by now anyway, aren't we, if we're honest? So we might as well go big. And I completely agree with the underlying observation that the UK offers value relative to the US, which is very, very fully valued on the basis of those few stocks that have been driving it up. As always, with predictions, the problem is one of timing, because I think at some point, people will start looking at the multiples they're paying for these big US companies, start questioning that. The S&P 500 will struggle as a result, and people will look at the value that the UK has to offer, and it will pick up. The question is 2025 the year in which that happens? I'm going to go with no. I'm going for a binary up or down on this one, and I'm going down. Not a lot down. I think maybe just very slightly, but I'm going down from its current level. But like I say, Rob, ultimately, I agree with you. It's just a question of timing. And something else that plays into this as well that I'm really aware of in the back of my mind when I'm talking about my predictions is that I've been paying attention to the news a lot more this year because I had to be paying attention around the UK election because of the content we were doing. I ended up paying attention to the US election because of the sheer soap opera of it all. And I haven't fully prized myself away from keeping an eye on what's going on in the news ever since then. Is that why I'm feeling more negative than I was last year across pretty much everything? I think it's probably worth throwing out there because I feel that might be playing into some of my judgments. And I've certainly been more accurate in the past when I've just ignored everything else that's going on.
It's tough, Rob, but I don't think anybody is going to hammer us if we get it right or wrong on the FTSE. And we've both gone in different directions, so hopefully at least one of us will be right, so we can save the credibility for the podcast as a whole. Where we've done surprisingly well recently, and actually last year I was very pleased with my prediction on this asset, is Bitcoin. And last year I said Bitcoin is back. Baby, I think was the exact words.
You did. I remember that distinctly, yeah.
And it turned out it was back. And Bitcoin in 2024 was a real success story. I think we're going to see a similar year again for Bitcoin. And the prediction I made last year with Bitcoin was it was going to be up by a big number. I can't remember what the big number I said, but it turned out it was going to be up by a much bigger number than that. But you have to remember Bitcoin hadn't done anything for a couple of years at that point. The US dollar price of Bitcoin at the moment is 93,000 as we record this. And it went through 100,000. So it has softened recently. But I don't think the party is over. In fact, I am going to go bold. And I think at some point this year, it will be 40% higher than where we are today. Now, if I said that about any other asset class, you'd probably just give up on us as podcasters and predictions and everything else. But Bitcoin is the one asset where you can make what seems to be absolutely wild predictions and yet still be right. But the volatility of Bitcoin, I think, allows it to go up by such an amount and also come down by a big amount. I would not be surprised if we saw huge falls this year as well in Bitcoin. But at some point, I believe that it will be at least 40% higher than where it is today. Today, it's at 93,000 US dollars. I believe at some point, it will be 40% higher than where it is now. We will see. It could be 40% the other way, Rob. That's the thing about Bitcoin. And you can hear in my voice, I struggle to call it an asset. It's a nuts financial instrument. I'll call it that.
Yeah, it is. A quick math, that means it needs to go above 130,000 at some point this year for you to be correct, which is not out of the question at all. Do I have to make a prediction on this? I just don't have a clue. I just do not have a clue. Because for all the digital gold stuff, in reality, it's highly correlated to the US stock market. It's highly correlated to global liquidity in general. So to know what's going to happen with Bitcoin, you really need to have a view about what this year is going to be like in the world in general. And that's what I feel I'm really lacking. I think that's why I'm struggling with all these predictions this year, because I just don't have a firm view, which makes a Bitcoin prediction really, really tough. I've got nothing. Shall I just go completely different from you just to make it interesting?
If you want to.
No, I can't quite get that. If Bitcoin reflects my sort of general sort of view that it's not going to be a blockbuster year in respect of stock markets or anything else, we're not going to see major shifts in rates, but it is going to be a relatively crypto-friendly environment. There's going to be probably good crypto news specifically, an absence of bad crypto news. That would put it in slight up territory. So I'm going to be less bold and just go close above 100,000 US.
So that's interesting. But I thought I'd mix it up as we're near the end of predictions. We've got one more after this. It's actually a very important one. But before we get to our final prediction, I asked ChatGPT to put a number on Bitcoin by the end of 2025. Just now. This didn't help my prediction. ChatGPT has predicted 120,000 US dollars.
Very close.
So who will be right? We will see. And maybe if ChatGPT has done well on that one, we look at introducing ChatGPT for other predictions as well. But we'll start with Bitcoin, see how it does there. And if it does reasonably well, then maybe we need to pay more attention next year. Maybe next year we're just reporting ChatGPT's predictions and not our own. We will see.
For this year, it's the collective intelligence of the world filtered through our most successful computer to model the most advanced technology, and you versus me is what we're looking at. So I'm not feeling particularly confident now.
The question is, am I feeling confident about this last prediction? Because producer Dan has cruelly put in who will win the Premier League, Rob. And I say cruelly because, as it stands, Liverpool are top of the league. So I don't think I've got anything to win here. Oh, I mean, obviously, if Liverpool win the league, that's amazing. But if I predict Liverpool win the league, then I'm happy. I was going to be happy anyway. This doesn't change anything. But if I predict they are going to win, and they don't, then it's just going to make it feel even worse than it would. And if I predict that they won't win the league, then that's going to feel crap as well. So I don't think I can actually win here. Me predicting Liverpool winning the league and then them going on to do it wouldn't heighten my enjoyment any more, I don't think. But I will go with that because they are clear. They are top of the Prem right now. And I think Liverpool will hold on. I don't think it will be by a huge margin by the end, but I think they will hold on to win the league. I really hope so. I really hope so, Rob. I might not turn up to do this episode where, at the end of the year, where we look at how we got on if they don't win the league. I'd be very upset.
No. Even if everything else was bang on, that would just ruin it for you. But you can feel confident because I'm outsourcing my predictions to Polymarket. And according to that, Liverpool has a 72% chance of winning. So I'm with you in your prediction that Liverpool are going to win. I'm also going to predict that Southampton are going to be relegated because there's a 94% chance of that, apparently. And either Mo Salah or Haaland are going to be the top goal scorer. So I'm feeling super confident in my Premier League predictions, despite the fact I know absolutely nothing about football. But the markets are speaking and I am listening.
Rob, that's probably the way to do it, the unemotional way. Although neither of us have strong conviction with our predictions this year, part of me is feeling weirdly optimistic as well. It's mixed emotions with this year's predictions. I feel like the numbers we've both given are sensible numbers. The areas we've picked are very similar as well, which is super encouraging. So I feel cautiously optimistic, I guess, is how I'd describe it. Cautiously optimistic with our predictions this year. There's the odd wild one there, but most of it is sensible stuff. And I think you can explain, even at the end of the year, why you picked what you picked, even if it doesn't play out, which is me starting to build the narrative of defending our position at the end of the year. Do let us know what your views are, what your predictions are. We will talk about this in our social channels. It's at Property Hub UK, wherever you are socially. Go and find us there, and we would love to hear whether you agree, disagree, and what do you think? What are your predictions?
So, our predictions have been made. The envelope has been sealed. It'll be deposited in the safe in the nuclear submarine shortly. But while that happens, we will move on to Hub Extra, the part of the show where we try to bring you a little bit more. Often it's some kind of tool or app. In recent months, there's been a lot of AI in there. But today, Rob, we're going back to basics because it is still January. I know from talking to friends that there are still people who are working on their goals for the year. And we had a little chat about goal setting on the phone last week. I thought it might be interesting to bring some of that to the podcast because, again, Rob, our brains are merging because we seem to be taking a similar approach to our goal setting this year and similarly different from how we've done it in the past.
As you get older, you have more experience, and that experience hopefully then turns into wisdom because you've had lessons, and that's where all that experience comes from. And something that's taken me a long time to learn, even though it sounds like a simple thing, is the power of focus. And I actually think focus is really, really hard to do in this world because there are so many distractions. There is so many different things you can do. There's so many opportunities. And as entrepreneurs, we know that, Rob. All we see is opportunity and ideas and the possibility. And that's a wonderful thing, but it can also be to your detriment. So the last few years, in all areas of my life, I've started to focus. It started with business and then it's come down to other areas of my life as well. And for the first time, I think, certainly for a long, long time, maybe the first time ever, I've been ridiculously focused with my goals this year. And we were talking before we went on air about our goal setting. And it's so funny that, once again, without us discussing it, we've gone away, we've taken our life lessons, and we've applied that to our own goals this year. Because we both have 4 main goals each. They're probably very different goals, but I only have 4 goals. And to give you an idea, in the past I've talked about how I split it into different areas. So it'd be like sport or fitness and business and family and friends and spirituality or whatever else, whatever categories you want. And then I'd have a list of goals in each one. And then I'd get to the end of the year and feel like I've been a failure. Even though I would have ticked off a fair few, there would have been probably a bigger list of things that I hadn't done. But giving it some reflection at the end of last year, what I realised is most of them weren't that important. And some of the things I had ticked were important. But also, I probably missed on some important stuff because of non-important goals as well. So I've really condensed it down. Now, I'll talk about how I'm going about these 4 goals in a minute, Rob. But that's what I've done. I know you've got it down to 4, but I don't know how you got to doing 4. So I want to hear why you've done it as well.
Yeah, it was similar reasoning. I feel like the list has been getting shorter every year. Last year, I took the approach of identifying different areas of life. And I think I sort of came up with 8 main categories of life and had one goal for each. That felt pretty focused, but in reality, it was still too much. So I felt the need to cut it down even further. So I tried to ask the focusing question of what will need to have happened by December 2025 for me to look back and go, that was a good year. I did well. And obviously, there were loads of things that I would like to look back and say that I've done. But what are the few key things that would bring me real satisfaction if I get to the end of the year and I've done these things? And that's what led me to these 4. There are some parts of life, even important parts of life, that I flat out don't have a goal for, which feels weird. But take fitness, for example. I'm in a pretty good rhythm. I know that if I just keep on doing what I'm doing without particularly having a goal, it'll be fine. I don't feel the need to push for anything significant in that area of my life this year, because there are other things, when I asked that question, what would really need to have happened for me to think this was a good year? Other things were more important. So that's how I ended up with 4. And I feel confident that they are the right goals because of the way I went about framing the question. But of course, Rob, having goals is important. Having good goals and the right number of goals is super helpful. But you still have to go and actually do it.
You do. So the system I have is every day asking myself and then putting a list together. What can I do to move these 4 goals forward? And like you, Rob, if I just deliver these 4 goals this year, it's an amazing year. That is clear. It doesn't need to be 25 goals. But if I achieve these 4, it's an amazing year. So every day, what can I do to move my goals forward? And I've already got today's list. And some of them are really small. Like, I've got to send somebody some dates for a meeting. Now, there are bigger things on my list than that. But if I do that and I don't procrastinate and get that meeting sorted, that's an important meeting where that person I know can introduce me to someone that I want to meet. So that is actually a really important thing for me to do. It's easy for life admin to get lost when you are a busy person. But if I make the time to send some dates, so find a date and send them to those person, then that will really move me on. I also have something else on my list today that says message in your business group for a recommendation for something that I'm after. This, again, in isolation doesn't seem like a big thing, but every day if I do these type of things, day in, day out, which I intend to, will I have a strong chance of completing those goals? The answer is yes, because the focus is there. Not just the focus on the 4, but the focus day in, day out, asking myself the same question every day. What can I do today that will move me closer to those goals? And they don't have to be huge things every day. Some days there will be a huge thing, but most days it'll be a collection of lots of small things that will move you forward. But it's easy to go through your day, feel like you've been busy, and then you look back and go, what did I actually do to meaningfully move my goals forward? And that's where this system that I'm implementing, early start to the year, I appreciate that. We're only a few weeks into January, but this system has already helped me feel like I've had a super productive start to the year. And I love the clarity and focus that it's given me.
Yeah, it makes total sense. A consistent action, even if it's small, every day. It feels like it's hard to fail if you take that approach. So we will see. But I will ask you again next week, Rob, because we are just 3 days away from the day that statistically most people give up on their New Year's resolutions. So if you can just keep that going for another few days, then I reckon 2025 is going to be a strong one for you.
So that's us done for another week. Thank you for joining us. Next week, we have our hotspots. We will be sharing where we believe the best places to invest are this year. It's a must-listen episode. And of course, we'll be back with Ask Rob and Rob on Tuesday. And you can find us in the Sunday Times on Sunday, answering your questions in the home section there. So until all these wondrous events take place, take care, have fun. Bye-bye.
Bye-bye.